In this video, I'm going to be discussing with you very quickly capital flow narrative, and this is the edge of profitable forex traders that you know. It's just that at a point they might not be telling you, So in this discussion, I'm going to really use our own trading system to explain to you what the concept of capital flow narrative, what it entails. In fact, some of the profitable forex traders uh, they might they might be harnessing capital flow narrative in their advantage unknowingly. Some of them don't even know that this is why I have been profitable. They just thought that is their strategy that is profitable relative to other people's strategy, not knowing that it's because they were able to pick assets, that ensure that we have a favorable capital flow. When I say favorable capital flow, I mean cross capital flow. So in this video, I'm going to quickly explain to you the concept of capital flow narrative. This is the edge you need. And believe me, if you can really understand and grasp this concept of capital flow narrative in the forex market, you will have a smooth ride. So today our focus is capital flow narrative, the edge of profitable forex traders. I want you to follow me closely. I want your attention to be rapt, and I don't want you to really skip this video. I want you to listen to every part of the video carefully. Now, when we say capital flow narrative for Potential Miners International, what we are saying is this is what capture what we do when we do our identification protocol and our optimization protocol. At Potential Miners International, we ensure that we have an holistic, framework of analysis that capture both that captures the fundamental analysis, the sentiment analysis, and the technical analysis. And that is what actually distinguish our trading system from any other trading system you can find online. Now, in our fundamental analysis, what we do is that we identify assets that we can trade. Then we now move our analysis further into the sentiment analysis. This is where we do optimization of our choice of assets. Then we now come up with a particular asset to trade. Then, of course, we now move into technical analysis. So capital flow narrative in this sense now is the summary overview of these three legs of analysis, and this is the overview that will now give you a direct evaluation of what assets am I to trade. Now, the summary of our capital flow narrative at Potential Miners International is that we will only trade the assets that pass the test of our fundamental storyline, our sentiment storyline, and our technical storyline. What do I mean by pass? What I mean by pass is any asset that do not give us contradictory storyline, across these three different type of analysis or storyline, that is the asset we are going to trade. So let me first identify our focus when we do capital flow narrative at Potential Miners International. We have storylines. Storylines. We have three storylines. Number one, we have the fundamental mental storyline. We have the sentiment storyline. Then we have the technical storyline. If you can listen to this video to the end, and if I'm not able to explain these three storylines in one video, I might do the second part of this video where you will now really understand, especially the technical. Maybe this is what I'm going to do. In this part one, I'm going to make this particular video the first part, and I'm going to explain in detail the fundamental storyline, and the sentiment storyline. Then in the part 2 of this video, I'm now going to discuss the technical storyline, and I will show you in practical terms how we use combination of these storylines to pick live trade. In fact, I pick one trade today. Today is 21st of October 2025. I pick a trade on GBP JPY based on this storyline, and the trade already cashed out. I picked the trade around 5 a.m. this morning, and the trade had already delivered. But in the second part, which of course I'm going to upload after this particular video, I will show you the technical storyline. I will show you step by step the technical storyline, and of course I will now give you example. I will show you examples of trade that we have picked. But in this part of the video, I want you to be very attentive at what I'm going to be explaining in terms of the fundamental storyline and the sentiment storyline. So when we begin our capital flow narrative, we start with the fundamental storyline. Fundamental storyline. And this is where we look at the economic indicators for our choice of currency pair or assets. We look at some critical economic indicators, which will give us what is going to drive this particular asset, fundamentally on the long run. We want to see what is that thing that will drive this particular asset on the long run. So bulk of what we do is to just have overview of what is going on a global scale. That is what we do when we do our fundamental analysis. And for any pair of interest that you pick, what you will do is that you will look at the fundamental storyline. Are you getting it now? For instance, let's say that we want to use case study. Our case study now is GBP JPY. For instance, case study. Let's say case study. Let me use this, at least because I picked trade on this today. Let me use it. We can use any asset of your choice. Of course, at Potential Miners International, we have our major currency pair, based on experience that we look out to. Then, of course, we have minor too that we, at some point we look into them. But now let's use GBP JPY as a case study. Now we want to look at the fundamental storyline for GBP JPY. What we would do at the fundamental level, you are looking at economic indicators. Such as, let's say, which is the most important, is the interest rate. This is the most important, but then let me just list others. The reason why it's important that you might need to just follow others is because everything dovetail into the interest rate. But you just have to have idea of what is the inflation rate. What is the inflation rate? Then what is the gross domestic product of the asset you are considering? Then of course the employment rate, the employment figures, or you say the unemployment figures, whichever one you see. So you are looking at GDP, you are looking at inflation rate, you are looking at interest rate. You see it. Now, but most importantly, when we begin to tell our fundamental storyline, we've focused largely per time on the interest rate. So what we do is, since we are using GBP JPY as a case study, when you pick pairs like this, you are going to do the fundamental analysis for both pairs, both currencies in the pair, both the quote currency and of course the base currency. So you go to your Forex factory. This is going to really help you. And of course, I'm not telling you to follow the news. That's not what I'm telling you to do. So when we tell our fundamental storyline, we have our summary here. This is where we focus on the central bank rates. You see it? These figures that you are looking at, these statistics, if you know how to really follow it, dog, like religiously, let me use that word now, it's going to really change the game for you. So you look at the interest rate for all the majors from USD to CHF. You will now begin to tell your fundamental storyline. You know, at the level of interest rate, what you want to see is that you are looking out for interest rate divergence. This is very important. Don't forget our Potential Miners International, we use what we call global macro trading framework. That is our framework. That is our trading system. PMI, global macro trading system. So we are looking at the assets that we want to trade. Now that is a currency pair, we are looking at both the quote currency and the base currency. We are looking at what is the interest rate for GBP. Now, as you can see, you will notice that the interest rate for GBP as of 21st of October 2025 is 4%. And that of JPY is 0.5%. Now, you will notice that there is a very wide gap between 4% and 0.5%. You have like 3.5% difference. This is what we call interest rate divergence. So immediately we spot that, and of course know that if you pick any currency pair, you can just look at the interest rate and compare it. What you want to see is that the interest rate for the two currencies should be wide apart. The wider the better, which means the bigger the interest rate divergence, the better for the particular story you are telling. Because if there is interest rate divergence, there is likelihood. Don't forget, at the end of the day, every analysis in the forex market is just backing up the likelihood, is to boost the probability of one thing happen over the other. So when we tell our fundamental storyline, we believe that both the unemployment rate, the gross domestic product, which is the output level, and of course the inflation rate, everything is going to reflect in the interest rate at the end of the day, because these are metrics that the monetary policy makers, they are focusing on. They look at the unemployment rate in the economy, they look at the inflation rate, they look at the rate of output, and that is what we, on the basis of this data, that is what makes them take decision for interest rate. Are you getting it now? So we look at the interest rate for our fundamental storyline, in addition to any of, maybe there's going to be election, maybe there is pandemic, or maybe there is any natural disaster, we follow those ones too on the fundamental level. But of course, if there is any of geopolitical tussle or like trade war or something, it's still going to reflect in the sentiment storyline. So, and of course our analysis still cover sentiment storyline. So follow me very closely now. So after we have confirmed that GBP, the interest rate is interest rate for GBP, I beg your pardon, is 4%. Interest rate for JPY is 0.5%. Divergence is 3.5%. This divergence is very key to our analysis now at the fundamental level. So what we now do, we have been able to spotlight opportunity for trade. And of course, we expect that a trade like this, we should be having a buy trade, given the fact that the base currency is GBP and the quote currency is JPY now. You get it now. So we are expecting that GBP JPY should be on the buy. Why? Because the interest rate for GBP is higher than that of JPY with the margin of 3.5. The implication of that is capital is expected to flow more into the Great British pound than, and of course capital should flow away from JPY. Now, why do you now need to still do other analysis? Now, the flow of capital into GBP and the flow out of JPY will be dependent on the sentiment overview of the market. This is very important, and what we are doing at Potential Miners International is that we are building community of people that will trade from a professional standpoint. You know, a lot of times you just see somebody will just wake up and, fund his or her account, and begin to trade. Say, I'm a forex trader. They don't even know anything about how these things work. So what we are doing at Potential Miners International is, if you decide to play in the forex market, you will be playing from a professional standpoint. And these are analysis we do at Potential Miners International before we take any trade. So we move to, now we have been able to cover our fundamental storyline now. So we now move to the sentiment storyline. I want you to really listen to me very carefully. Don't go anywhere. I know that this type of video might not be interesting, but if you really want to trade Forex at a professional level and you want to trade for a long time I mean for 30, 40, 50 years, for as long as you are living, please listen to this explanation very closely. It's very important. It will help your journey. Now we have the sentiment storyline. Now for this sentiment storyline, we are looking at some key indices. This is very important. We are looking at the risk sentiment of the market overview. Then we are looking at dollar aversion stance. This is very important. In fact, I've done a video on, around this sentiment storyline. I call it market sentiment overview, where I explain in details the 4 different types of market overview that we have. But in this video, I want to show you what do you look out for. For the fundamental storyline, I told you that among other things, you want to follow the economic indicator and of course the geopolitical stance. Let me put this number 2, geopolitical stance. This can include something like, let me move this a bit, something like trade war, something like pandemic, something like election, something like natural disaster, or something like that. You can follow this. This will be the fundamental. So these are the things you look out for. And of course, on top of it, you must focus on the interest rate, and I've shown you. Now for this sentiment storyline, what do you do? What do you focus on? For you to know now let's pick let's pick our risk sentiment. You want to look out for this index. This is very important. I hope that somebody will make use of what you are hearing now. This is going to really change the game for you, I believe. Now you want to look at, if you can see my chart very well, if you can see the screen, you will notice that I'm hovering over something, and this is what we call the S&P 500 index. you want to look at the S&P 500 index. So I'm going to go there now so that you will see how this whole thing will play out. This is S&P 500 now. S&P 500. Now, if you want to evaluate whether we have risk on or risk off, you need to look at the S&P 500. What you are expecting to see is that you should have a bullish market structure. If you look at it from the daily perspective, especially on the daily perspective, you should have a bullish market structure. Most of the time, if you use the directional bias, it will be above the cloud. But what is important is that the S&P 500 should have a bullish market structure. The same thing goes for the Nasdaq Composite Index. Everything should be on a bullish, run, which means that we have confidence. The investors, they have confidence in the market, and this is what when you have risk on. When the market for S&P 500, the Nasdaq Composite Index, the Dow Jones Industrial Average, when you have a bearish market structure or the trade is below the cloud on the daily now, that is showing a risk off. You will notice that this was all happen around, March, April. We have risk off. This was where the trade war between USA and China was on its height, and this caused a lot of panic in the market. And the next thing you will now look at after you have overview these indices, stock market indices for the S&P, the Nasdaq, and the Dow Jones, you want to look at the volatility index. I beg your pardon. This is the volatility index for S&P 500 index. You see, it is expected that if there is a risk off, the volatility will be above 20. If there is fear, you will see volatility of above 20. By the time you have panic in the market, you will see volatility of above 40. I want you to maybe listen to this video carefully and follow it. If you are to gauge whether the market, the risk or market sentiment overview is on a risk on, you want to look at the S&P 500, the Nasdaq Composite Index, and the Dow Jones Industrial Average Index. Then you will now still further confirm with the volatility index for S&P 500. I said that if there is risk on, the volatility will be below 20. But if there is risk off, the volatility will be above 20. You will notice that around I think this was last week, if I'm not mistaken. This was last week, and this fear, the volatility moved above 20, and this was because Donald Trump tweeted something, you know, about trade war between China. He was saying that he was going to increase the tariff to 100%, and because of that, there was a panic in the market. So the volatility index is going to help you to gauge the risk on, risk off sentiment of the market at any point in time. So to tell the sentiment storyline in summary, you want to take note of these indices: the S&P 500 index, the Nasdaq Composite Index, the Dow Jones Industrial Average Index, and the VIX, which this is what we call VIX, the volatility index for S&P 500. Having said that, let's go back to the next thing. The next thing we look at is we now look out for sorry. Then we begin to look out for, let's say you have just trying to get this, go back to where we are coming from. Sorry for the itch. Oops. I should be able to get this very so here we are. This is the fundamental storyline. Sentiment storyline here. Now, if you can see my screen now, we still have the sentiment storyline. Now, sentiment storyline, I've explained that you need to see the X and P 500. You need to see the Dow Jones Industrial Average, and you need to see the Nasdaq Industrial Average. See that now, IXIC. Then the next thing you talk about is whether there is dollar aversion. Dollar aversion. Dollar aversion stance. And this, how do you go about that? What you look out for, you are still going to use the DXY. You are still going to use an index, and the index we usually use is the DXY. The DXY, you will notice that since February has been on a downward market structure on the daily now. If you want to look at these indices, you will be considering the market structure, especially on the daily. And once the daily market structure begin to sell to the point that it drops below the cloud, you will know that there is dollar aversion. And over the month from February, March, April, May, up till I think as at 1st of October, we were still at dollar aversion. But currently now, because the market structure now has shifted and is now showing a bullish tendency and is above the cloud, we can say that investors, they now have interest in dollar, and the confidence in the dollar is now coming back gradually. Of course, anything can still happen from now because of the nature of policy in approach of Donald Trump. So, but then based on our indices or based on our index, as of now, we have DSY showing us that confidence is coming back into dollar gradually. Are you seeing it now? So this is how you tell the sentiment storyline, at any point in time. So because if you don't know the sentiment overview of the market, you will not know whether we have risk on or risk off, or whether we have risk on dollar aversion or risk off dollar aversion. These are the four different types of market sentiment overview. I've done a video on this. You might need to go and search for the video on this YouTube channel so that you can sit on it. I think it has part 1 and part 2. You can sit on it so that you will understand how capital flow during risk on, how capital flow during risk off, and how capital flow during risk on dollar aversion, and of course risk off dollar aversion. Because I don't want this video to be too long, I'm going to stop here and I'm going to release the second part of this video where I'm going to now discuss the technical storyline, and I will show you practical step on how to pick trade. Till I see you in the next video, please, I want you to stay glued to this channel. My name remains Mr. Akimbo Damilola, the king of waves. Thanks for listening. God bless you.